Hey guys, Mike here. So obviously a roller coaster ride in the market today. It came out green and people were like, oh my God, we're up over 1.5% in the indexes. And then at 9:42 exactly, it said, see you later, big dog. And it skyrocketed down and we did close lower than the actual June actual low was. So we are at a new 52-week low, but I'm going to show you the chart to show you the battle between the bulls and the bears so you can see it plain as day. And something's going on that I've been talking about for months now, which is saying the data just isn't adding up, right? What's supposed to be happening, there should be data to back it up, but everything's just not in lockstep, right? And I'll show you that and what's kind of throwing this off, and then look at, when we're looking at this, exactly what we need to happen for any real stabilization or move at all anyway, right? I mean, we can have the fear and greed index very lows at 3% today, by the way, went down from 5, and stuff like that. But there's two things that have to happen, and I'm going to show you why, and they're not as easy as you think. I mean, people are talking about it, but, and the reason why it has to happen is I'm going to show you what needs to come off the sideline, and there's a whole bunch of money, okay, that's sitting there. So, I mean, look at what I'm talking about here. U.S. consumer confidence rises for a second month, the most since April. Really? So let's take our own survey here. In the comments, did you feel really good about the U.S. economy 3, 6, 9 months down the road from now? And obviously we know why this happened. I mean, 3 main reasons. Gas prices came down, which means inflation kind of peaked and people felt pretty good about it. You have still a lot of jobs out there, more jobs than we have people to fill them, right? And wages are still either staying up or going up in a lot of areas. So to me, I think that's what people who are filling out the survey are saying, according to Bloomberg. And so I think that's why you're seeing that. I mean, my honest opinion, what I'm seeing, I'm not feeling great about the U.S. economy 6 to 9 months from now. Could be totally wrong. And in a way, I kind of hope I am. But, I don't want people to lose their jobs either. But I think the writing's kind of on the wall at this point in time. But again, there's certain things which we'll go over to kind of playing a factor in that. And then the other one is, I couldn't believe this one, but new home sales actually went up 28% last month. Look at this. It actually spiked up, even though obviously prices are higher, the rates are much higher. Things are just still going up. And so that was very shocking. I don't know. I don't understand the data. If you're in the business, let us know why you think that happened. Some people think it's because people are trying to get in these houses before the rates go up even further, which could be the case. But it seems like, why would you want to rush to the house because you want to beat rates when prices seem to be dropping in so many different areas? And so I don't really get that rationale. But again, I'm not in the real estate business. I just thought it was very shocking. And let me know in the comments, am I the only one that thinks that, by the way? But then hitting the S&P right here, you can see finally closed below the line right there. But if you look at the 1 minute here, look at this battle amongst the bulls and bears, man. I mean, we crossed over at lunchtime around 12:13, I think, and just look at the bears said, yep, finally got it down, and the bears said, heck to the no. And they just started battling out for basically 4 hours right here, right? And the bulls took it back above the line and stuff like that, but obviously they couldn't hold it or whatever. But I mean, it's just the battle was just unbelievable. And so this area right here, it's something to watch tomorrow. Like who's going to do what, right? Because obviously you're seeing a ton of bearishness. I mean, the bearishness is just crazy how quickly the momentum turned. And obviously the bears do have the advantage right here, and they continue to push this lower. And a lot of people want to see that. I mean, you see this went from 5% to 3% on this fear and greed index I like to use. And please hit that like, subscribe button and share the video if you get a chance. I certainly appreciate it. And so we'll have to see what happens. I think, it gapped up this morning, and even I was like, well, okay, that was a little faster than what I was expecting the bounce to be. And then, of course, it sold back off. Because I understand the Fed, they have so many speakers coming out like this week and next week. I don't even know what they're talking or why they're running their mouths, but they are. But there's a couple things that really have to happen. So I don't know what caused the sell-off once it popped up. I just think it was a fake, dead cat bounce or whatever you want to call it, to sucker people in maybe. But the funny thing is, if you look though, the index, the NASDAQ ended up green, right? And I believe the Russell did too, and a lot of growth stocks, right? A lot of high growth stocks that have been beaten up the last week, they ended up green. And so, that's something to look at there and pay close attention to. Because again, when things get this bearish, and they can always cascade down faster, when they get this bearish, that's when you got to watch out. But in order to have a real move, a real sustainable move, you got to have the 2-year Treasury yield and the dollar start weakening, okay? And what I mean by this is you'll see some people, they'll say any weakness will move the market, but that's actually not true, because if you just look, you can see right here the 2-year Treasury yield went down. You see the dollar goes down. But at the same time, what happened to the NASDAQ? You go over here to the NASDAQ, the QQQ, it actually ended up selling off as well. So they all three sold off together at the same time frame. And what we really need more than anything is, if you look at this one here, what you need is when you see these major moves up, these parabolic moves like that right there in the 2-year Treasury yield or in the dollar, when you get those and then you get a sell-off, that's when you usually see the big move up in the NASDAQ. The riskiest assets is what you're talking about here, right? So, you see the big drop right there. No shocker, it happened in June, of course. And you start to see, obviously it comes down. And then you look at the dollar, and it basically does the same thing, sells off multiple times in June, even though it did actually spike in July. But you can see that's when we actually had our move up going from June 14th on. And you kind of get to see which one really has more of an effect, right, on the riskier assets, whether it's the yield or the dollar. Because the dollar technically went up from June 14th going into July 15th, I believe, and yet we still had this major run, even though you had, as the dollar sold off, the NASDAQ would go up. As the dollar increased, the NASDAQ would go down, and then just hit parabolic moves coming in August. And so that's when you saw right there is that big sell-off in the dollar. And so if you can get both of them moving down at the same time after those big moves up, that's when you get a huge move or money moving into risky assets. And so right now, we obviously are setting at parabolic moves on the 2-year yield and the dollar. They are moving up like they're using rocket fuel. And there's actually a few reasons you want the dollar to come back down, because right now, it's wreaking havoc around the globe, right? You see all these different currencies in Europe, Japan, others getting just trashed, right? Because they can't keep up. Because as we raise our interest rates, our dollar gets stronger, and they're trying to raise interest rates to try to, back their currencies. But unfortunately, usually we would help them out in that, and we're not. We're like, nope, sorry, we got our own problems to deal with, right? And so another reason is, too, when earnings comes out, one thing that's going to hurt third quarter earnings, same way it did second, but it's going to be much worse, is the impact of converting all those foreign revenues back into the dollar, right, for Apple and Amazon and all the rest of them. And it's much higher now than it was in second quarter, right? Everybody thought it was going to weaken. It did not. The dollar kept going up. And so that's going to be a whole nother mess to have to see, and how it's going to affect the financial statements of these companies. And so, that's a couple things we got to keep in mind. Another one has to do with debt and all that stuff, a lot more as far as these other countries are concerned. So that's a whole different mess. But something else to keep in mind, and one thing will happen if this happens, traders are sitting on $5 trillion in cash. Look at what they got going on here. Basically, they're parking it in 3-month commercial papers, 1-year Treasury bills, and then the Fed's overnight repo area, of course, has just got trillions of dollars, $2 trillion. So let's look at all this cash right here, how much has just been piling up starting basically March of last year, and just continues to pile in. And so for those who say, cash is trash, obviously a lot of people hadn't listened to them, and they've been correct on this, by the way. And so if you're sitting in cash, or you have a nice stash already, put away, or you're piling yours up, you're in a good position. You really are. You are in a good position. And again, I think, like people said, there's no hurry, right? Things are a train wreck right now, and especially around the globe. The United States, believe it or not, a lot of people are piling into the dollar because they look at our economy as strong. Versus, you see what's going on in Europe. That's a hot mess right there. And man, the amount of debt they're trying to do right now, and how high the rates are to refinance the debt, to take out new debt, it's unbelievable. Especially all the energy crisis they got going on, and with the currency just in the trash right now, it's a mess, right? And so that's another thing that that's why earnings for third quarter is going to be really interesting, I should say. For these global companies. I can't wait to see them and hear what they got to say. And, again, I saw this and I thought I'd bring it to you to show you. I don't know if you're in a 60-40 portfolio, but, man, the 60-40 portfolio has just been blown out, right? It's only one of the times performed this bad. And we're coming right up on it, and that was in 2008. That's the only one close to it. And we're going to pass that because we're only like 1% away from that. And so I definitely see things getting worse in that area because we hadn't even hit a recession yet. And I'm keeping a close eye on that because I definitely want to see if people are going to start finally piling in to bonds. And I've definitely seen some indicators that's what they're trying to do. I know, I think it was Gottlieb or whatever his name is, one of these guys who's a billionaire, you know, bond investor. Like he says the best time to do it. But it's just one of those things. But I always think to myself, my God, we hadn't even officially gone into a recession yet because obviously the government agency that does that has not come out and said anything. And so, you know, and again, I'm seeing houses being bought. I'm still seeing people traveling. You know, some of the economic data isn't backing things up. The job market's still strong right now. It can go off the cliff at any moment, of course, but you know, it's just going to be, and especially with the stimulus, I just don't think things are going to fall as fast as people think they are. And you know how it is when the news media starts pushing a narrative, it's usually the opposite narrative. I mean, I'm in Florida, so we have a hurricane heading this way, but if you listen to the weather channels, Florida's going to end tomorrow. I mean, I think it should be illegal for what these weather forecasters do on these news channels, trying to hype it up to get clicks and views and everything else, saying it's going to be the worst storm ever. And I'm like, okay, and then by the time it usually gets up here in North Florida, it's not even a hurricane anymore, but they just hype it up and try to make people panic. And I mean, it's crazy. I assume they're getting paid by the advertisers or something to do that stuff, even though it should be illegal. But, you know, it's the same way you see the financial news. But yeah, things are bad. Trust me when I say that. But, you know, I always just wait till earnings. Wait to listen to the companies. Okay, things are supposed to be coming to an end in second quarter, and they didn't. Let's see if third quarter is fine where we really, really start to see the big companies take massive hits and saying, kind of throwing the towel and say, yeah, it's going to be rough. Fourth quarter is going to be rough, and we really depend a lot on fourth quarter. Okay, I know I'm skipping ahead in this country especially, so that's something to look at. But you know, globally, because we are global, as a global economy, all these companies depend on global revenues. It's rough, and it ain't looking good. You know, for the next 3 to 6 months, whatever you want to call it, but. You know, we'll have to see. I'm just being patient. Again, sitting in cash, you're sitting pretty. That's the way it is, right? I'm just waiting on the next bear market rally so I can participate some in it. And then, you know, sell what I got to sell and then ride the rest of it down if that's the case. That's just kind of where I'm at right now. And so the data proves me wrong. That's where I'm at. So let me know in the comments what you think, what you're doing. Please like, hit the subscribe button, share the video, and all that stuff. Almost 50,000, just a personal goal, and I sure appreciate it, guys. So appreciate all your support, and I will see you tomorrow. Maybe. We'll see if we're still here when the hurricane hits. I don't know. Have a good one.